What's up guys, your boy Wanele here and I'm back again to another video. But first of all, I just want to thank you guys that we have reached more than 100 subscribers in a month. Thank you guys, thank you for showing love. Please continue to support me, share this video, like this video, share it with one of your friends. So today's episode, we're going to look at the market outlook for the upcoming week. We're going to look at the top 5 pairs, right? So if you are new on this channel, please make sure that you like this video and then you hit the subscribe button. And if you are a returning subscriber, thank you for coming back, for showing love for the hustlers, man. So without wasting your time, let's get it. Okay guys, this is the out JPY and this is the daily time frame. So now what I'm looking for a sell on this pair. So now I'll drop down to a lower time frame and focus on this point here. I'm dropping down to a 4-hour time frame. So with the 4-hour time frame, I see that the market is currently on a correction. So the market came from this point, it went down to this point, it went up, it went down again, and it went up to this point again. So which means the market was on a correction. So now what I'll do is I'll drop down to a lower time frame and check and focus on this point here, because 1-hour time frame is the time frame that I use to execute the trades. So with the lower time frame, actually I will have to wait for a correction before I can take this trade. If I don't get this correction, and then I won't take this trade here. So if I do get this correction, this will be my entry and this will be my take profit, and my stop loss will be here. If the market happens to break this trend line and go even way down, and then I'll put more trades. If it continues from this level. So this is a out JPY. It's one of the pair that I'm looking for. Let me see on the 15 minutes. So yeah, you can see on the 15 minutes the correction is it's building over here. This is a correction, but I'll have to wait for a 1-hour correction for this one. So this is the first pair. Let me go and check the second one. So the second pair, it's CAT JPY. So this is the second pair, which is a CAT JPY. So with the CAT JPY, you can see the market bounced here, it bounced here, it bounced again. Currently it's bouncing here. So now I'm going to drop down to a lower time frame and focus on this point. So I'm dropping down to a 1-hour time frame. Let me just zoom in. Okay, with the 1-hour time frame, I really can see the market structure. So let me go to a 15 minutes. So with the 15 minutes, I can see that the market came from here. This is an impulsive move, because you can see it's a strong move. It's not like this move. This is a correction, because you can see the market, it looks like it's struggling to go up. So the market could easily go like this and then break down, and then break down this trend line. So if it breaks down this trend line, that's when I'll put my first entry after the breakouts of the trend line, and then I'll have my stop loss here. But if it doesn't go up like this, if the market decides to just go up like this, and then here it breaks down, then I'll also put my entry just after the breakouts. But now the problem with this, my stop loss will be a bit longer from my entry, because now the market broke here and then my stop loss is here. Unlike when the market it's on this level, when it's on this level, my stop loss will be won't be that long because it's just there. So you see the difference. So if the market continues to go up, if the market decides to continue like this, then I would be more happy to take this trade. But this is one of the pair that I'm focusing on for this week. So now let me go to the third pair of the week. So the third pair of the week, we have the RJPY, the KJPY, and then we have the Euro. We have a Euro CAD here. So with the Euro CAD, you can see it went up, it gave a correction, it gave another impulsive move, it's current on the correction, probably it's going to shoot up again. So now I'll drop down to a lower time frame and focus on this level. Let me remove this. This is a 1 hour time frame that I'm on. Let me go to a 15-minute time frame. With the 15-minute time frame, you can see it went up, currently on a correction. So once it breaks this correction, that is when I'll put my first entry. So what I'll do is I'll place my order here, and then I'll place my first target here, because it might happen that the market might bounce on this level, because you see it bounced here, it bounced here, it might bounce here again and then go down. But this is what I'll wait for, and then my stop loss will be just a little bit just below this level, just below this level. So this is a Euro CAD. Hopefully it doesn't come back to this point, because it could easily just bounce on this level and then come back down again before it can shoot up. Because if you're looking at the higher time frame, you can see that the structure is going up. You can see that the structure is going up. So now I'm going to my fourth pair, which is New Zealand JPY. So with the New Zealand JPY, let me go to a daily time frame. So with the New Zealand JPY, it goes like this. It's going up in a ascending order. So let me drop down to a lower time frame and focus on this point where the market is currently is. When I drop down to a lower time frame, you can see this level here and this level here. The market bounced on this point and then it went down. So with this one, there is two options. So but the option that I'm looking for a sell. So here, let me take away this one. So here I'm looking for correction like this, and then a breakout, and then a breakout. Then I'll put my entry, put my stop loss, put my take profits. But if not, if it doesn't break down, then because I'm looking at this trend line, to say it went up, it came to this trend line, it went up, now it's current on this trend line. Could easily go up here before it goes down. So you mustn't be quick to jump your guns. Because this might happen. Because it's possible. If you can look at the higher time frame, you're looking at the structure. This is the point where it keeps on bouncing. So this is the point. So that's another option, but you have to wait for all your rules. For instance, if you decide to enter here and then you put your take profit, and then the market decides to go back up, and then it takes you out on your stop loss here. So you mustn't be too quick to jump your guns. You must wait for one of the rules to meet before you can even place the trade. So for me, what I'll wait for is I'll wait for my MACD and wait for my RSI before I can put a sell here. So that's my fourth pair, which is a New Zealand JPY. Okay, let me go to my fifth pair. So my fifth pair it's a gold. So this is a gold. Let me just open a daily time frame and show you the structure here. So with the gold, you see impulsive move, correction, another impulsive move is about to come. So now let me drop down to a 4-hour time frame. 4-hour time frame, you see move up, move down, move up, move down, move up. Current is here, so we're waiting for a breakthrough. Put your entry, place it here, and put your stop loss like this. So this is a fifth pair that I'm looking for, which is a gold. Thank you again for watching this video. Please continue to support me and like this video, continue to share the video, subscribe if you haven't subscribed, and also if you'd like me to continue or there's something that you want me to share, please put down on a comment below. Cheers.